Good afternoon and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita with me, Sneh Shah. And when we're looking at the Nifty, there's clear and evident pressure. We're seeing 0.5% lower on the Nifty, and within that pack, 5% lower on an Axis Bank. We spoke about that. But Eternal is the other one, 4% lower. JSW Steel, HCL Tech, both 2+% lower. So pressure clearly mounting. Also, the breadth not looking too good. Just 11 or 10 advances to nearly 40 declines that we're seeing on the index itself. Bharti is the top gainer along with Titan, Tata Consumer, Bajaj Auto and M&M. Bajaj Auto in terms of the analyst meet, obviously, maybe one of the reasons why that stock is doing okay in trade today, despite a very, very weak market. What we're also seeing is that broader markets are following in tandem. 0.8% lower on the Nifty mid cap, the Nifty small cap as well, seeing some bit of pressure in trade today. So across the board, you are seeing pressure. 0.9% lower on the Nifty small cap index. When you're looking at the overall breadth within the Nifty 500 basket, even that is looking quite weak. Less than 100 advances to over 350 declines is what we're seeing. And PB Fintech, Avas, KSB, AIA Engineering, eClerx, Westlife Food, all declining 3% plus, and you're seeing pressure across the board. Some of the gainers, a Nazara Tech is one, up 6% odd. A Tata Tele is 11.5% higher. A Fact is doing fairly well for itself, 5% higher. Finolex Cables, 5-star are just some of the other gainers, along with Triveni Engineering, which is also up 5% plus. Supreme Industries, the stock is perked up 4% odd as well in trade. So that's how it's playing out. Among the newsmakers, 3.5% higher on an Arvind Fashion, with Motilal Oswal seeing a 45% upside to the counter versus yesterday's close. Axis Bank is down nearly 5%. We spoke about that. Swiggy is down nearly 4% as well outside the Nifty basket alongside Eternal. What we're also seeing among some of the other newsmakers is Ion Exchange, which is up 5% on a weekday of trade. Zaggle up 4%. Arvind Smart Spaces making a smart move, 2.5% higher. Hunasa, First Cry, which is Brainbees, all of those are in focus and doing fairly okay for themselves on an otherwise very, very weak day. In terms of sectors though, Snehi, what are you spotting?
Lots of momentum coming in on the FMCG index. FMCG is something that's playing out very well today. A bunch of stocks in focus. Britannia, on the back of the management reject that they've announced, they've brought in the new head of the dairy business and also the new marketing head. So Britannia is up about 2.6%. Godrej Consumer looking good at 2.25% uptick. It's Marico, Tata Consumer, Imami, HUL, Dabur, ITC, all of them seeing gains between about 0.5% to 2.5%. So wide ranging gains coming in for FMCG, and the staples basket is doing pretty well for itself. It's names like Nazara that are keeping the gaming, the media pack okay. Nazara is up 7%. You have PVR that continues mounting onto the gains it saw yesterday on the back of blockbuster Dhurandhar performance at the box office and the 5 new screens that they had launched in Hyderabad. That kept the stock afloat, up 4% yesterday. It's another move coming in on PVR. Pardon me, that was on a weekly basis. PVR is slightly under pressure as we speak, but Nazara continues to do very well, a 6% uptick coming in. Autos, some stocks in the green, some in the red. It's actually auto anchors that have been doing well. Watch out for Uno Minda. That stock is up about 2%. On the flip side, Sona Comstar is on the flat line. So you have a mix shade coming in from the auto index, but it's actually realty and metal that are deep under pressure. Let's talk about some of the metal stocks. Hindustan Copper is lower by 3%, JSW Steel, Jindal Steel, and from the realty pack, Brigade, Prestige, Godrej Properties. After a little bit of momentum, there's once again deep pressure on the real estate pack. But we have Kunal Bothra joining us in the studio. Let's loop him in the conversation. And Kunal, give us a sense of what you're making of the markets. Before we talk to you about some sector-specific and stock-specific moves today, a lot is standing out in the market. But nonetheless, we're struggling to hold on to 25,900. And as we were talking about yesterday, pressure once again on the street.
Yeah, pressure once again for the indices. Back again to that grinding range. One day up, one day down for the index. Yesterday was a day of recovery for the indices. We managed to come back just about that 26,000 mark on the spot levels Nifty. Today we've slipped back below the 26,000 levels, and we are almost at 25,900 mark on the spot juncture for the indices. Again, today's market breadth is a lot different than what was yesterday. Today it's in the favor of declines by almost 1:2. Yesterday it was a good recovery which we would see in the fag end. same time. So we were expecting that the market breadth would start to open up and improve. Today the sectors have also changed. You're seeing fresh sector turns or reversals happening. So that puts in a question mark that the markets are really not going anywhere in terms of the price trends, and we are looking at this move, what's happened for the indices as a broad-based consolidation. So the view remains that no momentum on the indices. 25,750 so far is a good short-term support for the Nifty. But then, as I said, that given the way the markets have moved, it's very difficult to call in that which support and which resistances at this point of time could be considered as very key over the near term.
Okay. And Kunal, with regard to the Nifty Bank, and let's pull out that move on the Nifty Bank. It'll also give us a sense as to how the Nifty Bank overall is moving. And I'm just going to quickly pull that out. 0.7% lower on the Nifty Bank index, and that's where the pressure seems to be evident, and that's where some of the pressure even on the Nifty 50 index is coming from. Kunal, what next for the Nifty Bank? Because we've had a prolonged period where the Nifty Bank has stagnated, if I can call it that or use that term. What next?
See, on charts, there are two ways to look at a chart. One is, I think, in terms of price, where you look at the weakness of the price on absolute basis or relative basis. But the other is in terms of indicators. Now, the worry for the banking index is that we are at a point where the RSI, for example, the 14-period RSI on the daily charts for the Bank Nifty is almost at a 2.5-month low for the bank index. That tells you that we are looking at an inherent weakness which has come across in the banking pack and the banking index. This started off, so when the RSI had managed to give a breakout 2.5 odd months back, that was I think in the month of September end, October start, when the Bank Nifty was almost at 55,000 mark, and from there we scaled up almost 5,000 points in the past 2.5 odd months. So I'm not saying a full reversal of sorts, but then it tells you that the move which has happened for the bank index over the last 2 to 3 months, we are now in that phase of a pause, a slight retracement, underperformance for the banking index. And that's what I would believe, that one has to try and look at opportunities, because if you're looking to buy the banking index on momentum, the momentum will fizzle out very quickly because the indicators have started to show signs of weakness. So my broad sense is that the Bank Nifty would probably scale down to maybe say 58,000, 58,500 mark potentially in the next 1 week. That's where I would believe that the indicators would start to moderate out or maybe go back into slight oversold territories, and the trade setup would start to look attractive. So right now we are in that phase of moderation, mean reversion, call what you want to, for the banking index.
Okay, and while the overall sentiment of the market right now is largely negative, let's take it across to my colleague Ishika, who's joining us with a list of all the stock-specific action that one can see in the market right now. Ishika, hi.
Here are some of the stocks in spotlight this afternoon. We have Cello. Investec has initiated a coverage with a sell rating and a target price of rupees 530 per share, citing macro headwinds impacting nearly 30% of the portfolio and some near-term valuation discomfort, right? So near-term sentiment could remain under pressure going ahead. We also have Coforge in spotlight. It has launched Data Cosmos, an AI-enabled analytics platform aimed at accelerating enterprise transformation. This will support its positioning in high-value AI and data-led transformation deals. We also have Railtel in news this afternoon. It has backed an order worth 148 crores from the office of the RGCC. We also have Nucleus Software in spotlight right now for providing an innovative solution to the Vietnam's military joint stock commercial bank in collaboration with someone else. And we also have Brainbees Solution. It has formed a new subsidiary called Swara Corporation in the United States. Now, geographically speaking, the company operates primarily in India, as well as it has some presence in the Middle East, right? So this marks a significant step in geographical expansion efforts as well. Now, last but not the least, we have SEPC. It is the news for bagging an order worth 270 crores for strategic Ajmer-Chanderia railway doubling project. This comes a day after it announced a 3,300 crore project from SECL. So the stock has risen even further, and in the last 5 days, the shares are up 19%. There we go. Back to you.
Okay, Ishika, thanks for taking us through that. So, Kunal, lots of stocks to watch out for. In fact, before we start talking about some stock-specific action, another one to keep a close eye on today is Avenue Supermarts, or D-Mart as we popularly know it. because CLSE has reiterated its high conviction outperform for the stock with an unchanged target price of 6,300 rupees per share. Ravinder, take us through what the note entails.
Well, yes, DMart is in focus where CLSA has come out with a note on Avenue Supermarts, and they have maintained their high conviction outperform rating on DMart and maintain an unchanged target price of rupees 6,300. So as the pace of store expansion normalizes, CLSA expect that free cash flow to turn significantly positive and store addition are now likely to remain over the next few years, and with the store addition rate estimated at 15 to 20% annually, and management currently has a visibility of around 2,200 stores, and free cash flow is expected to improve once the expansion phase moderates, following a trajectory similar to global value retailers such as Walmart, Costco and BIM. And CLSA believe that value retailers like DMart will continue to remain relevant for the India's urban mass consumers, while quick commerce is projected to account for a less than 20% of the urban consumption by FY35, and this still leaves a large addressable demand pool for the DMart, and the company is expanding its private label portfolio, which is priced at 40 to 50% below branded alternatives, and the scaling up of this private label is expected to support the long-term margin expansion and improve cash flow. CLSA remain positive on the India's consumption and retail outlook, highlighting that DMart's business model as having a deep competitive moats, and overall the risk reward for the DMart remain attractive at a current valuation. So back of this bullish note from the CLSA, stock is up approximately 1%.
Kunal, firstly, thank you, Ravinder, for that. But Kunal, with regard to DMart, that move, of course, it's cooled off from the highs. Is this one looking particularly decent on charts? Because, again, it's one of those which has been through a prolonged period of pain and consolidation. What next?
Yeah, that's the concern for DMart. I think the top which was made for the stock was in July 2024, when the stock was at 5,500. And it was not as if that 3,800 where the stock is trading right now is already at a multi-month low. The low was actually hit in the month of November, December 2024, when the stock was almost at 3,400, 500 levels. So it went through a pain of a 2,000 point correction first, bounced back, again going through a grind. So that tells you that the stock is not yet settled into a trading range. It's not yet found that bottom or support for itself on the medium-term charts, which means that a time-wise consolidation is something which is at play. This, I believe, could probably continue for DMart for the next 3-6 months. So price-wise, very attractive, if you ask me. At 3,500, 800 mark, I think it's a good range, a 10% band which long-term investors can accumulate. But the only concern is that whether the stock will come back into its momentum zone, break past about the 4,500, even 5,500 mark. I think that will take a lot of time for the stock. So price-wise, yes, attractive.
But Kunal, the 6,300 rupees, the price target that CLSA has set for something like a DMart, it's never reached that level, first of all.
Yeah.
And second, it's 1.6 times higher than where the stock is trading right now. How justifiable is this figure?
No, it could be justifiable because stocks like DMart have a tendency of going through 3-4 years of pause. Now the high which the stock had made, I think the all-time high, if I'm not wrong, was in 2021. So if you scale from 2021 to 2025 end, it's almost like a 4 years of patch of consolidation.
Sure.
We've seen large cap names have this behavior of going through a patch of 3-4 years of consolidation, and then all of a sudden they tend to move up 20-30% in a matter of maybe few weeks, few months. So that could happen, I'm saying, for such stocks. But then the current charts as of now are just indicating that the price is attractive for the stock price, but the momentum is something which is missing.
Kunal, topics for this afternoon.
So I'll go with a couple of buy calls over here. The first one actually is Bharat Forge, which has come back into a potential breakout mode, trading at 1400, 1420 mark. So we'll look out for target ranges in the targets in the range of 1480 for Bharat Forge, and stop loss could be kept at 1380 mark. The second would be a Ban Samvada Motherson. That's a chart which is still looking attractive. In fact, one of the very few auto anch names which are holding up to those initial breakout points, trading at 119, 120 for Samvada Motherson. Would look out for a buy with a target of 126, stop loss at 117.
Okay, so those are some of the stocks that have made it to Kunal's radar this afternoon. But on that note, we'll slip into a very short break, keep the conversation going on the technicals and also the fundamentals, and a deeper dive on the market on the other side.